Well, markets are finally looking like they could be due for a further pullback. Everyone does need a trim on their hair after all before their hair grows again, and it's a normal part of markets to pullbacks bring life-changing opportunities, and that's something that I've been talking about over the last couple of weeks. It's great to have your company. So what's happening in markets right now and making news that you need to know? Well, we saw tech stocks take a bit of a tumble. The Nasdaq 100 fell 2.1%. The broader S&P 500, which of course tracks the biggest 500 companies in the US, that fell 1.2%. Local stock markets, they're also continuing to break down lower. We saw yesterday the Aussie share market, the ASX 200, fell about 1%. And that means now the ASX 200 is down 3.3% from the October record all-time high. In other market news, you also need to consider that Bitcoin has fallen below a key level, below the 100,000 US dollar mark for the first time since June, suggesting there's a lot of fear in the market. As for big moves to note, well, of course, we've been speaking about high-flying tech stocks, why they could come under pressure, and now concerns are that stocks have run up too much, could be due for a pullback, and we're starting to see this play out in markets. Palantir fell 8%, Nvidia down 4%, falling to $198. In other news, we are seeing investors buy into what's called defensive style investments. So we're seeing investors buy into Berkshire Hathaway, which has pushed its stock up 3%. Berkshire, of course, recently spoke about holding yet again an even more greater cash pile than they had before. And of course, they're making profits, record profits from insurance companies. There's a lot to be said about that. And of course, as the textbook goes, when markets fall, we traditionally see investors buying into everyday items and food businesses as well. So no surprise, consumer staples and healthcare, they're the traditional sectors that rally when markets fall, and they did overnight. Specifically, standout stocks, Yum, which is the owner of the KFC franchise, their stock, Yum, they rose 7%. Also, look out for McDonald's. They report results tonight, so keep an eye out on that. What else to watch? Well, lots of employment data is expected to be released in the US tonight and the next day. That's, of course, if we do see data come out, and if the government shutdown ends. No one knows if that's going to happen, but we are expecting ADP employment data followed by jobless claims. And the thinking is if we get bad job data, as in higher unemployment, as in more people are out of work, the thinking is that this could actually be good for markets because it theoretically means the Federal Reserve, the key bank in the US, may actually need to cut interest rates in December. And remember, previously, the rate cut expectations reduced for December. As for the focus today, I really want to go back to the idea of the fear about a market pullback, and I spoke about this last week and the week before. Now, why I want to talk about it today is not only what happened overnight, but I want to draw your attention to the volatility index. We can track this on Moomoo by just typing in VIX, V-I-X. This basically measures market fear or greed, and we can see that our volatility or market fear has pricked up to its highest level in about 3 weeks. Remember, a couple of weeks ago, we had fears that some very small US banks and some auto companies actually started to go bankrupt. A few banks, a few institutions actually went bankrupt. And now we are seeing market fear on the rise again. And this basically reflects that investors are betting the market will go down. That's what you need to think about. To put that into context, it's not just me who's been speaking about this over the last couple of weeks, but we're seeing lots of Wall Street heavy hitters now saying, yeah, valuations are too high, stocks have run up too hard, too fast, and we're probably due for a pullback before markets can return to the modus operandi and rise over the longer term. Chiming in on the debate is heavy hitter Michael Burry. Who's he? Well, I'm not sure if you've watched the film called The Big Short. He's a US fund manager, and he's known for making money ahead of the GFC and in the pullback of the GFC. And he basically came out last night disclosing that he's got a bearish bet on Palantir and Nvidia. And this basically spooked tech investors, and indeed that's why we saw Nvidia and Palantir fall lower. Also remember a couple of things. Yesterday we spoke about traditions. We spoke about throughout history, November has been the strongest month of the year, as the textbook history books have suggested, but that doesn't mean that history will repeat itself because we have been speaking about this pullback for some time. So what does this mean? Do you also believe me? Do you believe heavy hitters on Wall Street that we could potentially see a bigger pullback here? What could a pullback be? Could it be 5%, 7%? Could it be 10%? Or even a bigger pullback, maybe a crash? Don't know. So investors right now will be questioning a couple things. Firstly, what do you do? Do you potentially consider selling, as in take some profits off the table and keep some of your money on the side to buy stocks you like in the future at a cheaper price? Secondly, do you hold? Remembering that markets throughout history, the key indices, specifically the S&P 500 and the Nasdaq 100, have always recovered from a market crash in history. Well, that's what they've done throughout history. And so too have the world's biggest companies, Microsoft and Nvidia. In the past, they have recovered from crashes or pullbacks. The third thing that you need to consider is do you look to potentially buy stocks that you like at a cheaper price? Remembering that those major indices that we've been speaking about, they have recovered in the past from crashes. But I do want to point out something that an analyst has said overnight. Although Palantir and Nvidia could come under pressure, this one particular analyst is recommending them as long-term growth stocks to hold. So that is a consideration and a way that you could potentially think about playing things as well. So what are some stocks that you could potentially look to add to your watch list? As for how you want to play them is up to you. Do consider that Palantir, as we said, their shares fell 8% overnight, just a day after they raised their annual revenue outlook. So they're just another high-flying tech stock that has seen huge swings. And what do I mean by that? Well, let's go through an example. So they see massive pullbacks, or they have in the past, followed by rallies. And so if we have a look, Palantir fell about 47% back in February, but then its stock rallied to a new record. It rallied up about 160% after that pullback up to overnight's close. The technical indicators, if you're a charter, sure, they might be suggesting that Palantir could fall further. So that's something for you to consider. Let's have a look at Uber now. Uber also had a big pullback. That's because they basically delivered news that the investment world didn't like. So their shares fell 5%. That was their biggest drop in 7 months. They basically delivered quarterly results that miss analyst expectations, even though their growth numbers were really strong. Their growth numbers, the key growth metrics, were actually at their strongest levels since 2023, and they gave a bullish outlook ahead. But do remember that that this stock, Uber, is a strong buy according to average analysts out there. That's over a 12-month period. But if you look at the technical indicators, it suggests Uber's chart may be a little bit iffy. It suggests that there could be room for a potential fall, a further fall, that is. The last investment to add to your watch list is perhaps IBIT. IBIT is the world's biggest ETF. That trades in the US, but Australia's equivalent is VBTC. And these basically are ETFs that track essentially the price of Bitcoin, which, as we said, is appearing to break down lower. Now, according to Bloomberg, Investors have withdrawn $655 million from the world's biggest Bitcoin ETF, IBIT, over the past week. In fact, specifically, almost $200 million was withdrawn or sold out of that ETF last night. And this basically suggests that fear is indeed picking up, that Bitcoin could potentially be falling further. Do also have a look at the chart. If you're a chartist, it says that Bitcoin may potentially be in oversold territory, but it's been lower, or it's been, I guess, in more oversold territory than this before it potentially rebounds. So what I'm saying is the technicals are a little bit iffy, suggesting volatility is here for Bitcoin and also for IBIT. And last but not least, don't forget to look out for IBIT, which is expected to list on the ASX over the next coming weeks.